Well, Bolande Agbaje, one of the research analysts with Financial Derivatives Company, joins us now for Commodities Market Update. Good morning.
Good
Bolande.
morning.
Good to see you again.
Good morning.
Well, one major news out there, PMS.
PMS.
That's what everybody is talking about. Well, yesterday we noticed that some of the marketers, particularly the independent marketers,
yes,
already selling at 170. All right.
Naira per liter, yes.
It's
a necessary evil, you know, if we're going to have a business that's going to be truly reflective of the market. You're seeing oil prices reach a 13-month high of about $65 per barrel. So that has to be translated, you know, in terms of costs as well, because landed cost is about 180.
We saw this coming anyway.
We did see this coming, and I think now we've seen that, you know, the independent marketers who import from abroad selling at 170, and then those that are still supplied by the NNPC are still maintaining, you know, 162 naira per liter.
But don't you think this is going to create some kind of discord? Perhaps what may be bringing about all of this is the type of deregulation we are having at the moment.
Yes.
Do you think it's time the government should just really let go and allow the market forces to determine?
Yeah, it seemed like the government had let go, but we're hearing news of the fact that, you know, these marketers and the unions and government are supposed to meet next week, and they're supposed to discuss a price mechanism. So it calls to question, is there really, you know, true deregulation? Unlike when you look at, you know, diesel prices in the month of January was an average of about 190 naira, but as of today we're seeing at about 235 to 240, which is truly reflective of, you know, the global market and what the domestic market price should be.
You see them setting a ceiling, some kind of ceiling?
If they do, then, you know, they're going against what deregulation should actually means.
Because at the end of the day, this would bring a lot of pain to the average
Nigerian.
Well, that is the way to go, I suppose.
Yeah, that's why I mentioned
how do we then get it right if we have to, you know, deregulate? And I believe, or I want to believe, that if we should deregulate appropriately, well, we should. Yes, the prices might go up, but before you know what is happening, maybe it will begin to taper. There will be a lot of competition, and then a lot of people would have the interest to actually invest in
yes, definitely.
And when you have a lot of people doing the same business, you'll find a lot of competition there, and automatically you'll find
prices. Yes, you know, when there's true and intense competition in the market, you see that prices would start to reflect, you know, their true value, and might not necessarily stay as high as it should, because, you know, there are more investors in the market, there are more players in the market. So generally, in the medium to long term, it actually favors the economy. You know, there will be growth regarding, you know, the oil and gas sector, and you know, this avenue of, you know, whether we're deregulated, whether there's subsidy, can just, you know, end, and we can move on from it completely.
Yeah, but now recently we saw inflation numbers coming out, and it's still trending high,
going up,
almost 17% now, and then we have food inflation above 20%, yeah. And then with this now,
well, definitely,
and of course the core inflation has continued to grow.
Yeah, so with this, we expect that, you know, at least in the month of February, core inflation should, you know, at least inch up to about 12%, and that's just because, you know, we're seeing the impact, or the negative impact, of higher PMS prices, which would definitely hinder, you know, or increase the cost of manufacturers. We're already seeing from the diesel side, so diesel power trucks will definitely be more expensive, and, you know, when it comes to PMS as well, the cost of, you know, using generators, because electricity tariffs are already very high. So when you look at, you know, a combination of all these factors, definitely core inflation, we should see the impact on core inflation and, you know, headline inflation before tapering down, you know.
Looking at oil prices, still trading as high as $63 per barrel. What happens if Saudi does not renew their production cut?
I don't think, at least for the month of February and March, I think, you know, Saudi's cut of about 1 million barrels per day will still remain. But there's that risk of, you know, whether they would, you know, remove these cuts, because we're happy that oil prices are currently trading at about $65 per barrel. However, Saudi has come out to say that it's not time to smile yet, because oil prices are extremely volatile. We're seeing the very, very low temperatures in the US, but, you know, some analysts forecast that by the end of this week, these temperatures would be, they'll start increasing. And the negative effect that we're seeing on supply, I think U.S. production had been cut by about 30%, which is huge, about 3.5 million barrels per day. Demand is off the roof, and it's literally too good to be true. But once the temperatures, obviously it's not permanent, once the temperatures change its course, we'll definitely see oil prices just inch down a little. So Saudi has come out to say that it's not time to smile yet. There's still uncertainty in the market.
Well, it looks like an irony there. Well, oil price at $65. Yes, it's good for Nigeria, but we're seeing the foreign reserves drop continuously, even as this morning. So when we should actually be having some kind of...
Should be seeing some...
Yeah, so obviously there's a lag between, because you have to give time for them to actually sell, this crude products, and retrieve their revenues. But at the same time, it seems like, there's more coming out of the reserves than what's going in. We've seen the pressure on the FOREX, the issue of FOREX rationing, the demand is huge, and the CBN is struggling to, meet this demand. And we're seeing the impact of this on our exchange rates. It's currently depreciated to about 478 naira to the dollar once again. We're seeing that divergence, coming up again. The IMF had already mentioned until you have this exchange rate flexibility is when investors, you can reduce the exchange rate risk in the market. Investors can come in. We desperately need the capital flows, which is another source of this FOREX to, meet up the demand as well, so that people can just be clear on, the direction of the Nigerian economy.
So GDP numbers are coming out later today.
Yes.
What are your expectations?
Well, at this point, it seems like we expect, GDP numbers to just improve to about, negative 1.5%, which is great. But, obviously this calls to question what the CBN would do in return, in the sense that, inflation is increasing significantly, and they'll probably look at ways they can, increase interest rates to bring that down, just because, they're seeing improvements in the GDP numbers.
Right, of course, talking about this interest rate, there we have continuously seen a fall in the equities market owing to the fear of the interest rate environment in the fixed income market. So where does that leave us?
Well, it's typically when you see uncertainty in the market like this, most people are wary of what to do, when it comes to the equities market. There's high uncertainty in that market space. Nobody would necessarily want to invest until they're sure, they're going to get some good returns from it. And obviously, I think people are also moving towards, the securities that are being, introduced in the market as well, which seem to be safer option than the stock market at the moment. And also, the cost side of businesses would definitely have significant impact on their earnings, at least in the first quarter. So, most businesses would look into not necessarily investing in the equities market for those particular companies.
Right. Barnley, it's interesting to note that even though we're seeing food inflation go up, but your slide says that that's on one of your goodies you have on your slide, prices of some food commodities are declining.
Coming down.
Which are those, and what's driving them?
Usually, the prices of the food commodities that would decline at this point would be the imported commodities, or the commodities that have imported inputs. So the likes of bread, wheat, we've seen wheat, price of wheat increase significantly, and also the exchange rate impact on some of these prices. So even if you see lower prices globally, when you look at our exchange rate, by the time it comes into the market, it's actually more expensive for some of these companies. So these inputs, corn as well, when it comes to animal feeds, we'll definitely see some impact on them. But the general, low prices was seen in the month of February. The food inflation hike that we had seen was in the month of January. So we do expect that. Regarding food inflation, we don't necessarily expect to see a significant hike, just because on average we had seen most of the food basket, decline in prices. Not to say that the prices are still, they're still high on average compared to the year before.
And I hear that Cameroon has granted authorization for new cement facility. What does this mean for Nigerian businesses like Dangote?
Yes, so it's great news.
Yeah.
Just because we welcomed competition is great. For innovation and for just business growth generally. I think Cameroon they're about to. Whatever investment that is done is supposed to, add about 1 million tons of cement into the market, which, is great. I think currently Dangote subsidiary owns about over 30% of the market share in Cameroon. So Dangote is still doing fairly well. I think Dangote has already obviously priced into or added plans, business plans to their, to their business, in the sense that they've obviously priced in the African Free Trade, agreement, and what they're going to do going forward when it comes to competition with, other cement producers across Africa.
And even now that they are beginning to export clinker, something.
Clinker.
All right, thank you very much, Bolale.
Thank you so much.
Thank you.
Great to see you. Right.